Welcome everybody to another QB Power Hour. Today's topic is Reconciliations Deep Dive. We're going to be talking about both desktop and QuickBooks Online today. So Dan, if you want to go ahead and go to the next slide.
Yep. Who are you?
I am Michelle Long. I'm very glad to have you guys here today. And sorry, I was trying to get to the attendee view. Anyway, I'm Michelle Long, CPA. My own practice is Long for Success. I am a trainer for Intuit for the past, 10, 11 years. 12 years almost. I started in 07 with Intuit, started teaching desktop in 1999. So that's my passion. I really love QuickBooks, and I'm very glad to have you guys joining us here. If you are new to QuickBooks, check out the practice sets. We recently updated the QBO practice set. Those are on Amazon. If you want more practice, check it out. Dan, tell us about yourself.
Well, my name is Dan DeLong. I'm the owner of DanWith here in Tucson, Arizona, where we work on transforming businesses through technology. I'm former Intuit technical support, technical trainer, proficient in QuickBooks Desktop, online, point of sale, and services that attach to those things. And I recently did some technical editing for QBO for Dummies, which should be being released in the next couple months.
Wonderful. Glad to have you with us, Dan. All right, so let's go ahead and go to the next slide then and just give a little overview about the QB Power Hour. So details about the QB Power Hour, as you know, it's every other Thursday. We will skip a Thursday here or there for Thanksgiving or Christmas, or if we're both at QuickBooks Connect or something like that. But in general, it's every other Thursday. We talk about not just QuickBooks tips and what's new and troubleshooting, things like that, but we also sometimes cover marketing, like we did one on branding and one on YouTube. We talk about value pricing and things like that. So we do topics that will help you in your practice, including third-party apps, and we're starting to do niche nuances, and Dan and I are working on scheduling out these series for the rest of the year here, so you'll know what's coming up. So we'd love to have you keep joining us for these. Always, when you need the slides, if you go to that URL, that tiny.cc QB Power Hour Handouts 2019, and then also you'll see the link there for the recordings. That's where you'll find the handouts and recordings. I know we're behind on some of the recordings, but we're getting those uploaded, and Dan's getting the website finalized, and those are all going to be updated and go live here in the next few days or next week, let's say. But you can always find all the handouts at that one link there. So it's a great link for you to bookmark so that you've got it handy. And today's handouts are out there, or they're also in the GoToWebinar toolbar, so you can get the handouts for today. Upcoming events that we have, of course, the QB Power Hour, then also the QuickBooks Roadshow. We've got the virtual conferences are going on about every month, but then we're doing the Roadshow. I'm going to start hitting the trail as well as all the other trainers mid-September through I think mid-December. And not only are we doing certification stuff, but we're doing intro to QuickBooks for accountants. We'll do some certifications, including advanced certifications. We're also doing some master classes, 2-day masterclass, and some grow your practice workshops. We did those last fall and people just loved them. So Intuit is letting us do those again. So check those out. I'll show you on the next slide where you can see those. Then also, Dan and I both, Dan, you'll be there, right? QB
Absolutely.
Connect?
Absolutely.
Yeah, wouldn't miss it, right?
Right.
It is the best conference ever. We would love to see you in San Jose. Great time to book your flights now. You can get Southwest. They fly into San Jose, or you can get flights into San Francisco. And it is a great conference if you can attend. I'd love to see you guys there. Dan and I both would highly endorse it. Wouldn't you agree, Dan?
Yeah, I mean, it's not just about QuickBooks. I mean, it's just about your practice. I mean, it's perfectly aligned to our webinar here. I mean, it's not just for that sort of thing, but it's I mean, just the speakers that they have, you know, and it's just a great event all around.
It is. And I'll tell you, one of the best things is the networking. The
Mm-hmm.
networking with, your peers and with each other and with Dan and I and everybody else, but also networking with Intuit employees, giving them your feedback, asking them your questions, as well as with the developers of third-party apps.
Mm-hmm.
And then there's small business owners there as well. So it is just really great. So Dan, if you want to go ahead and go to the next slide. So where to find the QuickBooks VCon and the Roadshow? If you go to qbtrainingevents.com, that's another website that you should bookmark. You'll find down there, see in the red box, you'll see where the webinars, they have webinars every single month on a variety of topics that are free. The in-person training, you can check to see if we're in a city near you. Like I said, the fall tour is going to be starting soon. And we'd love to have you joining us at those various events. And then the virtual conference goes on every month, again, with a variety of topics, with the exception of during busy season. I think like maybe February, March, they don't do it. But for the most part, it's every other month. So we'd love to see you there. All right, Dan, you want to go ahead and go to the next one?
Mm-hmm.
All right, so we're going to be talking about reconciliations both in desktop and online. But first, let's talk about some best practices when it comes to reconciling. So when you're reconciling, some best practices, whether you're using desktop or online, is how you're entering these transactions. So for purchases, all right, when they're buying things or spending money, they're entering expenses, they should either enter bills and pay bills in QuickBooks, enter and print the check in QuickBooks, so you're getting the check entered in QuickBooks, make online payments. You can do online payments from within QuickBooks in both desktop and online. In desktop, it's called bill payment. Is that right, Dan?
Yeah, QuickBooks Online Bill Pay, I think, is the technical term for it, but it's powered by Bill.com.
Yes, and that's the same in QuickBooks Online. It's bill pay powered by Bill.com. So it's like Bill.com Lite. So you could enter the payment in QuickBooks and push it out through that, or you can push them out through other third-party apps or logging into the bank website and you're entering those payments. Or have your clients use plastic. So they're using a credit or a debit card, and then you can set up those bank rules so that you're able to automate a lot of the process. The main thing that you want to remember is don't let your clients enter things manually. Don't enter a handwritten check. Like, don't go to Costco and write a handwritten check, or don't do cash payments, because with the manual checks, you don't get the payee name when those things are downloaded. So it requires more time on your part. Therefore, it should require more money. Same thing with cash payments. They'll forget to write it down or tell you about it, and so you lose expenses. So in general, if they're going to do handwritten checks, charge them more, several $100s more, because it's taking you more time. Yeah. And then, Dan, do you want to comment on that at all?
Yeah, so I mean, when you think about the bank feeds and setting up online banking, the online banking originally, when it was first initially introduced, was to help with reconciliation, and that was its main goal. Matching what the bank has with what you have already recorded in QuickBooks. And a lot of people will manage their business from the bank feed, and that's something that you want to steer away from. But just kind of keeping that in mind, that the original idea of connecting your bank to for online connection was originally intended just to help you with reconciliation and making reconciliation easier. So when you have those clients, or maybe yourself, that is managing the business from the bank feed, that's going to kind of break some of the workflows with regards to these best practices that we're talking about, where they skip over some of those intended workflows and we're going to highlight some of those in the coming slides, right, Michelle?
Yes, yeah, we will talk about some of that. And Dan, go ahead and go to the next one real quick. Right. So we were talking about purchases on the one hand. Now when we're talking about sales, and this is true again for both desktop and online, a best practice, especially on sales, is entering the invoice, when you get the money in, you receive the payment and it goes into undeposited funds. then you make the deposit, so that you're grouping those payments together into one deposit, which will match your reconciliation. Or if they're using a sales receipt, on the next slide you'll see sales receipt, which is going into undeposited funds, and then you make the deposit. So these are best practice workflows to help automate the process, streamline the workflow, and will help avoid mistakes and things like that. And it helps save time on your part. Now, somebody had a question here. Lisa says, I have a few accounts that believe this is not real-time accounting and require me to manually enter everything as it is intended. How do you address that? Well, first off, if you're getting the information from the client and entering it, that's not real-time accounting. It's after the fact, because you have to get the checks that were written from the client, or you have to get the bills from the vendors, and you're entering things after the fact. Whereas when you are doing it through the bank feeds and using credit cards to drive the purchases or online payments, that is more real time, that is more up to date, and you're capturing all those transactions. Now, you do have some people, whether it's the accountant or whether it's the clients, who still want to do it the old school way. If you've got a client that has a lot of bills, you probably are entering bills and paying bills so you can manage accounts payable, and that's perfectly fine for those clients. But for a lot of your small business clients that are going out and making purchases at hardware stores, at the gas station, for meals and things like that, running those through the credit card bank feed is the perfect idea instead of entering every transaction. But you can discuss that with your clients. Dan, do you want to go ahead now and talk about reconciling in particular with desktop?
Absolutely. And I just wanted to quick add that when I would talk to people on the phone at Intuit, I would like to do analogies, and they actually coined the term Danalogies when I would come up with something. And the way that I explain these kind of workflows is kind of like that old song of, the hip bone connected to the thigh bone, and those types of connections between, like undeposited funds and accounts receivable or accounts payable, those are the joints. And sometimes you can skip over that and fuse your leg together or fuse your ankle, and they still work, but sometimes that's not necessarily as perfect as things were intended to be. So when you reconcile in QB Desktop, we just want to talk a little bit about the flow itself. So when you go in and you do start reconciling in desktop, this screen is really what I like to call the opening balance blues, because this is where the rubber hits the road, and just really understanding that you can't change the beginning balance, and the expectation of the beginning balance, of course, if you did reconcile last month, that beginning balance would be the ending balance from the last reconciled statement. And that's a normal expectation. However, when it comes down to it, it is something changed between the reconciliation and the beginning reconciliation. So when you reconcile it last, that day, something changed between then and now. And trying to figure out what that change was is a challenge. And since reconciliation is kind of the bread and butter of what an accountant or bookkeeper really wants to maintain, that gets a little challenging at times. I love when I would talk to people, and back in the early days when I started at Intuit, we had a toll number that people would have to call in for. And I never quite understood why somebody would spend an hour trying to figure out a dime discrepancy. But then when you get down to it, I mean, this is their baby, and that 10 cents certainly could be $10,000 tomorrow. So they want to know where everything is, and they certainly could had a better understanding of or appreciation of getting things exactly reconciled. So there is a reality then that when it comes to the opening balance, the reality is it's the sum in QuickBooks, the sum of what's been reconciled in that account. So between then and now, if something changes, that beginning reconciliation is going to change. So that is knowing where that the beginning balance comes from on the reconcile screen is a great way to understand where that's coming from, so that you know the difference between the expectation and the reality. When you're actually in the reconciliation screen, it's really just math. So the opening balance plus the deposits minus the checks equals the ending balance. Many times I had this discussion with accountants and bookkeepers that it just figuring out which one of these areas is not matching the statement is just going to guide you where you want to go and find that out. So is it the opening balance? Well, then there's a workflow and there's a way to figure that out. Is it the deposits and checks? Just adding those, selecting all those that are reconciled. If that amount doesn't match the statement, well, then you either got one that's reconciled that shouldn't be, or one that isn't reconciled that should be, or maybe it's missing altogether. Maybe it's a date issue. And then the same thing with checks and payments. And if those things are correct, then your ending balance should match, and then you should be able to reconcile. But no, just kind of breaking it down into those 4 areas, what's not matching the statement is then going to guide you as to what the next steps would happen to be.
Hey, Dan, can we go ahead and launch a poll question?
Oh, yeah, absolutely. I forgot all about that.
I did too. All right. So do you guys do the bank reconciliation for your client? And we had a couple of questions about the slides. If you go to the GoToWebinar toolbar, you'll see the slides are over there, or they're also in that OneDrive, that tiny.cc URL that we provided to you, where you can download them from there as well. But go ahead and tell us if you're doing the bank reconciliation for your clients. And somebody, Tanya has a very good point. Tanya, we're going to talk about that a little bit later. Somebody had said here that they have a few clients that they don't reconcile, stating it comes from the bank, it's recorded, or it's reconciled in real time. I have to actually show them instances where the bank broke to show them why it's a crucial step in the bookkeeping process. Lisa, that's a very good point. Is just because we're downloading those transactions, yes, we're getting the activity in real time. And the old way that we used to do it, we used to enter all the transactions historically. We'd enter them manually into QuickBooks, and then at month end, we would reconcile to ensure we didn't miss anything, to make sure that everything that went through the bank account was recorded in the books. Well, now it's a little different because we are downloading every single transaction, so you are kind of up to date. But sometimes things happen where something doesn't get downloaded for a few days, or maybe things were downloaded twice, or somebody entered it in QuickBooks and downloaded it, so you've got duplicates out there. So reconciling is still important, very important. The good news is, usually once you've got everything set up, reconciling is a matter of just enter the ending statement date, the statement balance, things are zero, you move on. It takes a few seconds. So that's the great thing about it. So, and okay, I'm going to go ahead and close the poll question, and I'll just share the results verbally. 70% say always, 21% only when they need help, 4% of them the client does them, and we got 5% NA. And somebody says it's half and half for them in the questions box. They type that in, that they do some and the clients do some. And that's a good philosophy, depending on the client's capabilities. They may or may not be doing it. So, all right, Dan, take it away.
Certainly does depend on how much they want to be involved in their business itself, for sure.
Yes.
So with the previous reconciliation, this will help. The important thing to note about the previous reconciliation, that this report is going to be the saved report as you did the reconciliation. There are 2 options in the report. You can see that one is as the PDF file, and the other one is the QuickBooks report. So it allows you to drill in on the transaction and those types of things. So the important thing to note about the PDF is that when you do the reconciliation, you click on Reconcile Now, that PDF is a frozen moment in time. So that's similar to what I compared to as taking a picture of your reconciliation. You can't modify the picture. There's no Photoshop with the PDF. So so that is that's going to be that frozen moment in time when you did the reconciliation. So that PDF is going to be a good resource to pull that up and see what did you do at that time. But that doesn't tell you what happened after that, because that's typically what you're investigating is why the opening balance is completely different. So oftentimes it's a good idea to run the QuickBooks report, transactions cleared, plus any changes made to those transactions since the reconciliation. So that gives you a little bit more ability to see maybe what did change. With regards to the reports that are in here, when you're using Premier or Premier Accountant, that's going to have multiple reports to look at. When your client or when you're using Pro, you're only going to see the last PDF of the report to be able to review that. And there we go. Oftentimes using the CDR, we talked about that in a previous QB Power Hour webinar. Using the client data review will help you troubleshoot that opening balance. Because what this allows you to do is it allows you to freeze that moment in time, but also kind of make a line in the sand so that when transactions or modifications are made after that, it'll allow you to see that a little faster. So there's tools to see those changes, and in the next slide here. So when you're troubleshooting the reconciliation, the troubleshooting prior account balances. So after you've made that moment in time in the client data review tool, any change that they've made to those transactions, whether they've been reconciled or not. This is the transactions that have been modified that are just dated, prior to that. You'll be able to see the difference between that, and on the screen, you'll be able to click on it, and it will give you the transactions that have been modified. Again, those transactions aren't necessarily going to be the culprit, but it will give you some guidance as to what that is. In the reconciliation module, there is a discrepancy report. Again, those transactions aren't necessarily going to be the ones that did, but it's a prime suspect. If you've modified a transaction that was previously reconciled, chances are that may have some impact on that opening balance, because again, the fundamental truth of QuickBooks is the opening balance is the current sum of what's been reconciled in that account. Another analogy that I heard that I started using is it's the opening balance is like a pirate ship. There's an R in there somewhere. So it just adds up all the R's or the checks, what's been reconciled, and that's what displays as the opening balance. But on the discrepancy report, you're going to see changes to reconciled transactions, what type of change it was. You can then run an audit trail to actually see the history, especially if it was deleted. You want to be able to recreate that, and the audit trail is going to give you that the listing of what that was. If the change occurred outside of the reconcile, it's not going to be listed here. So if it was a transaction that was entered directly on the register and reconciled there, it may or may not show in this discrepancy report. So it's always a good idea to keep that in mind, that on the discrepancy report, it's not going to show you everything. Especially if it was a transaction that was in another register and then added to this register, edited and then changed to that register. So now it's in the checking account as it was in the savings account, but now it's reconciled. It was reconciled with the savings account. Now it's in the checking account. It's adding into that reconciliation or that opening balance.
Hey, Dan.
Yeah.
Okay, so we had a question here, and I can't remember. In desktop, does the audit trail, it says it does show the chain of transactions history up through the deletion in desktop. Because like in QBO, when I click on a transaction, I can see all the activity up through deletion for a transaction. Is it like that with desktop?
Yes.
I can't remember.
So you have in the Audit Trail, you're going to have the latest, history of that transaction, and then anything that happened prior to that latest will be there as well. So you have the latest and the prior, just like you do in the audit log in QuickBooks Online. So it will show you, the split. You just can't resurrect it from there. You have to recreate it from there. So just kind of print out that prior, the last state of that transaction prior to it being deleted, and then you'll be able to recreate the transaction and use it that way.
Thank you.
Now, undo reconcile is, in my opinion, it's a little overused because when you undo a reconciliation, it just undoes what that reconciliation was. So if you took, the PDF of the undo or of the bank reconciliation, it just undoes the cleared status of what was done. If you had a transaction that was deleted, for example, it doesn't undelete it. All it does is undo the reconciliation as it occurred. So a lot of times what I find is that a lot of people are they're spinning their wheels by undoing the reconciliation, because they end up having to redo all of those reconciliations once they find the one transaction or the multiple transactions that are modifying the opening balance. So best practice, make a backup before you undo anything so that you don't have to redo something that you didn't have to redo to begin with. It will, in desktop, it only undoes 1 month at a time, so you have to peel back the layers. So QBO has that over desktop, and undoing may not be the best option for you. So, finding out where that opening balance came from, if that's what you're troubleshooting. Undo is not like the first step; it's kind of like the last step. Typically, that's what I would recommend is that undoing would be your last resort to do that. Now, where undoing comes in really handy is that if you did have a deleted transaction, and then you found that you needed to redo that, there's two options. You can do a mini reconciliation for that one transaction that you had to re-enter, and some people don't like to see that. Having two statements for the same date, undoing the reconciliation to add that back in. But if it's from 3 months ago, you have to undo 3 months of three statements and then redo them all. So sometimes just doing a mini reconciliation is a better option, and just understanding why there is one transaction on that reconciliation is a good idea. So
very good.
We wanted to add another poll here.
Yes, let's go ahead and launch that poll question.
Okay, because all we've been talking about is just reconciling in general. Whoops. Oh, I closed it.
Oh, that's okay.
I think we did it at the same time.
Oh, okay. Well, we'll just verbally ask it for you guys, because I clicked launch and then you clicked it and it closed it. But let's just verbally ask it. How do you reconcile credit card accounts? Do you do them just like the bank accounts? You download the transactions and reconcile monthly? Do you enter one transaction when the statement comes? Perhaps you enter one check and you group and enter the amounts that way. Or do you not reconcile credit cards at all? So how do you do that? A lot of people are saying same as the bank accounts.
Good for you.
Dan, do you do one-on-one training or group training?
I do both, but typically one-to-one.
Okay. Somebody had that question. I was going to say, yes, we both do both, but I wasn't sure.
Right.
Yes. And as you all know, I love to do training because I love to talk. All right. So on the credit card transactions, one of the biggest things Dan and I wanted to point out when it comes to reconciling is when you do reconcile a credit card and you click reconcile now, do not do not enter a bill for payment later. Because just trust me, that usually causes problems, right, Dan?
Yeah, they forget to pay it.
Yeah, and then they enter it, and then you got duplicates, and so the best practice is just, when you reconcile, go ahead and enter that payment now, or
Yeah.
you're downloading that payment. So.
Credit cards are a rare breed in that they have, you have uniqueness about multiple card holders under the same account. So multiple card holders under the same account. And so you would do that as a sub account for each particular card holder, so you can download the transactions for that card. And then when you reconcile the parent. So all the cardholder transactions will show up that way. That's not anything like a bank account in reconciliation. So some people just kind of steer away from that in some cases. And then the idea of that you've got a statement and then you have 25 days to pay it is another, idea that, doesn't really happen with banking accounts.
Yes, very good. Okay, let's go ahead and talk through some stuff with reconciliations in QBO, and then we will do more Q&A as we have time at the end. So now we're going to talk about reconciling in QuickBooks Online, and there's a lot of similarities between the two, but there are some differences. So earlier we talked about those best practices dealing with purchases or entering your sales, going through undeposited funds to make the deposit. And the reason that's important is that in QuickBooks Online, when you've got your downloaded transactions, let's say it didn't match anything. Maybe the transaction was older and it didn't pick it up, or maybe it was a partial payment, or maybe they didn't go through undeposited funds. So what happened is maybe they entered an invoice and then they have this deposit come through and they want to match that to multiple invoices. Or maybe they have one payment that was actually 2 or 3 checks or something, I don't know, but they're trying to match one thing from the bank account to multiple transactions in QuickBooks Online. All right, when that happens, those multiple transactions will be recorded. So in this example, you can see they're trying to match 2 deposits to one transaction. It's going to show them as separate on the bank reconciliation. So you'll see here, I'm saying it's 2 deposit. It was probably 2 payments because we have 2 amounts here. So we had 2 payments that were entered into QuickBooks as 2 payments. We record them as we match the one deposit of $200, but then when I go in to reconcile the bank account, you'll see it's listed as 2 separate transactions. That's why you want to use that undeposited funds to group them together. All right, you want it to agree with the bank statement. And people might say, well, yeah, but this is okay. It's still going to reconcile. It is, but what if you have to undo it, like Dan said, and then, it's 3 months later and you're trying to re-reconcile. You see $200 on the bank statement, but you see a 180 and a 20. It's going to take more time to try to figure that out. So best practice is to follow those workflows the right way to begin with and use that undeposited funds. So again, if you're matching to multiple invoices, all right, so if you're taking one deposit, matching that to multiple invoices, that is going to show up as separate deposits on the bank reconciliation, on the bank account. They will be separate in there. It's not grouping them together into one deposit. That's why we use undeposited funds. So keep that in mind, and that's one reason why you want to follow the best practices. Now, just to confuse you, if they take one deposit and they did enter the payment that was received, and so if they're going to do it and they're going to match that one deposit to the payments that were received, so here we have 3 payments that were received, then it will make one deposit. All right, so when you match to invoices, it's going to record multiple invoices. It will record them as multiple deposits. When you match multiple deposits from the bank feed to payments received, it will group them. But the best practice, just to avoid this, is with accounts receivable, actually enter the payments received, apply it to the invoice or the sales receipt, or go ahead and do those things there. But just be aware of these things. If they are matching downloaded deposits, to multiple transactions in QBO. I wanted you to be aware of how it works and what you're going to see. Now, Dan already talked about this, how the beginning or the opening balance works and how it can get messed up. So just to summarize, a previously reconciled transaction, somebody changed the amount, or the amount was changed or deleted, because if you delete it, that makes the amount 0. So they changed the amount or deleted the transaction, or they go into that bank register and they changed it from reconciled to cleared, or no mark there, or they changed the status in the bank feed. The good news, or in the bank register, the good news in QuickBooks Online, when you go in to reconcile, it tells you, hold on there, your beginning balance is off. How many times have we, and let me just launch this question here while we're talking about it. How often do your clients change previously cleared transactions? How often do your clients do this and mess things up? But with QuickBooks Online, before, what would happen is we would spend all this time trying to reconcile. We would do, like Dan said, we would double check, do the total deposits match? Yeah, they do. Do the total checks and payments match? Yeah, they do. But I still don't reconcile. What's going on? And it takes you a while to figure out, uh-oh, my beginning balance has changed. Well, in QuickBooks Online now, it gives you this warning. Whoa, hold on there. You're not ready to reconcile, the beginning balance change. So I'm going to show you how that works, and it's really cool. So on this poll question, and as a reminder, as you're answering this poll question, these poll questions are for Dan and I, and for you all to kind of get an idea of other people's responses and things like that. We aren't offering CPE at this time. We haven't been since about March, I believe. And we don't have plans to do that in the near future. So for now, no CPE, but that's why I share with you, if you need free CPE, go to that QB training events. There's webinars every month. There's usually a VCon every month. Those are offering free CPE for you. All right, I'm going to go ahead and close this poll question, and I'll share the answers with you. 27% of you say they mess it up all the time. 14% of you, oh my gosh, that's kind of weird, but it should sometimes.
And the fact that people answered it.
I know, it's supposed to be sometimes. You guys are smart enough to figure that out. I don't know why it did that.
Somebody's reading code.
Now, 7% of you are pretty smart here. This is the key. They said never happens because I set a closing date password every month. Ding, ding, ding. That's what you want to do. After you reconcile at the end of the month, change that closing date and use a good password so they can't mess it up without entering the password, which you may or may not give them. 44% of you said not very often. So that's great. You got good clients. Hang on to them. Okay. So I'm going to go ahead and go back into the slides here and continue talking about this. So when your opening balance is off, it's going to tell you, hold on, it's off. And you've got a link that you can click. It says, we can help you fix it. In QBO, it notifies you, here's all these transactions that were previously reconciled and they now have been changed. And it's going to tell you the change type. What is it that changed? And if you can see here, and I apologize, these screenshots are a little fuzzy. The first one, the change type was it reconciled in the register. So somebody clicked in that column in the bank register and they marked it as reconciled. Or they changed the amount. The third one there has multiple change, and the bottom one says deleted. So it's going to show you exactly what happened, and then you can go in to fix these things. So if they change the reconciliation status in the register on this top image, see where you can change that R, you can change it back to cleared or uncleared or blank or whatever you need to make it. You can change that status right there, or in the bottom picture you can change the amount. If they change the amount, you can change that right there as well. So it's going to bring that up for you, allow you to make that change right there, quick and easy. So I like that. Now, what if they deleted it though? On the one where they deleted it, you're going to want to click view so you can go in and look at that audit history like Dan was talking about it. You're going to click on the one right before deleted, because deleted, poof, it's gone. So you click on the one right before that to see what are the details. And I would have this open in one window and then go into enter that transaction again in another window so you can see exactly what it was. But you have to re-enter a deleted transaction. And then like Dan said, you can re-reconcile just that one transaction. So what you would do is, here we are in the middle of August. So let's say I'm doing this as of July 31st. I would do a second reconciliation for July 31st. And you're going to put in there. So yeah, your opening balance will be wrong. But what happens is, when you clear this one transaction that you re-entered and you put in the right bank balance, it then will fix your reconciliation, and it resets that opening balance for you. Because like Dan said, it's all math. So you're adding that transaction back in there, and you're resetting what the balance should have been. So on July 31st, you actually have two reconciliation reports. One was the original one. Somebody then deleted something, you re-enter it, and then you re-reconcile just that one transaction. Okay, so that's kind of how that works, to help you to understand that. Now, something else that's going on in QuickBooks Online, and Dan, you can add in on how this works for QB Desktop or not. But with QuickBooks Online, they've recently changed, and I say recently because I can't remember how many months ago, sometime within the last year, I believe, they've changed how we get the bank feeds from these banks, and it's smarter now. So QuickBooks knows what the date that it cleared. And so what happens is, sometimes you might have a transaction, and this used to cause a lot of problems. It doesn't so much anymore. If you had a current cleared future dated transaction. What? How can that happen? Well, a lot of times for payroll, you have to do payroll a couple of days before the paycheck date. So let's say the paycheck date is on the 1st of the month. Your transaction might be entered in QuickBooks on the 29th of the month, because you have to enter it so many dates. So it's currently cleared, but the checks are future dated. So now if you mark this statement ending date, it knows that it cleared in the current month, even though it's dated the 1st of next month. It knows. So here you'll see October 1st. It knows, because we took off the statement ending date. You uncheck that. Okay, so you want it to look at all transactions, and it will know that that cleared after the statement ending date, and it will mark that off for you. Okay, so in those situations like payroll, you'll want to be aware of that. Take off to show statements only before the statement ending date. Then on the other side, sometimes you have a future cleared but current dated transaction. What? How does that work? Maybe you made an online payment, so you entered it in QuickBooks as of the 29th, but it didn't clear or show up on your credit card statement until after the end of the month. So it's a currently dated because you entered it in QuickBooks, but it cleared in the future for next month. So again, QuickBooks will know that. And when you have the statement ending date turned on here, it knows that it's not going to check it off for this month's reconciliation, but when you go in to do next month, it does check it off for you. So it's really gotten a lot smarter on the dates that things cleared. So you need to remember to turn on or off that statement ending date depending on the situation. If you're dealing with paychecks, they cleared next month, turn it off. That way they'll be checked for you. If you're dealing with situations where it's current dated but cleared in the future, turn it back on. Okay, so that can help you when you're troubleshooting and looking for things. And I just love how it's gotten smarter and easier for us. Dan, does that work the same way in desktop?
It's like a light switch. It just goes on or off with regards to that checkbox. So if you say hide, then it hides, and even if they are cleared, it doesn't go into the balance. So oftentimes just toggling that checkbox will then allow you to see the transaction, but it's not as smart as QuickBooks Online because they're not putting as many resources in there.
Okay, all right. So and I'll in a little bit, we're going to have time. I'll go in and show you how, when you've got transactions that are messed up, how that's working in QuickBooks Online. So I'll show you that in a minute. All right. Let's see, is there a preference to always hide future transactions in QB Desktop? Yeah, if you want to do that, like Dan was just saying, you click the thing that says show statement ending date only, show transactions for the statement ending date. And that's where, we're talking about undoing a reconciliation here. And when you go into your reconciliation history, Dan already talked about this, where you'll see all the months that have been reconciled. And he had mentioned in desktop, you have to do them one at a time. So if you need to undo 6 months worth at a time, you have to do 1 month at a time. Is that still the case, Dan, with desktop?
Yeah, you're peeling back the layers of the onion.
Right. Whereas with QuickBooks Online, you could go down to the very first bank reconciliation and go into that report, go click over here on the drop down and click undo. It would undo all of the reconciliations with one little click. Therefore, only the accountant users will see the ability to undo. Your client does not see that. Thank goodness, right? We don't want the client to undo all the bank reconciliations in one fell swoop there. All right.
And then you don't have the option to back up like you do in desktop. So
yes, you do with a third-party app. There's
with a third-party app.
Yeah, you have Chronobooks and you have Rewind, and I think there's a couple of other ones. But yes, it's not the same as desktop where you can do it on your own. You have to have a third-party app, but there are apps that allow you to back up QBO, and then you could restore it in the event that you do mess things up. And I had a client one time, and let me just pop into QuickBooks here. I had a client one time, his name was David, and bless his heart, he tried really hard to reconcile, right? Because he was one of the clients. He said, like, I want to do it myself. I can do this. I want to do it myself. So he would reconcile, and he would force it all the time. And then I would come in there, and I would see, when you go into history by account, I would come out here, and I could see auto adjustment, and it would show you when they forced the bank reconciliation. I'd call him up. I'd be like, David, you can't do that. You forced that bank reconciliation. I'm going to undo it. Now, I don't see undo here because I'm logged into sample company. But I'm going to undo it, David, and you have to re-reconcile, and you have to find the mistakes. If you need me to help, I can help. Anyway, he kept doing this. And then finally, because where does this auto adjustment go? It goes into reconciliation discrepancies, right? So when you print your P&L, you see it like at the very top of the expenses, reconciliation discrepancies, 3,766. You don't want to see that, right? So he got smart. At least he thought he got smart. He went into the bank register and he found that, and he changed the account to office supplies. And he thought, I got her now. I changed it. She's not going to find it because it doesn't show up as reconciliation discrepancies. And so I called him. I was like, David, you did it again. He's like, how did you know? I said, I told you I know everything because QuickBooks knows everything. QuickBooks will still show auto adjustment. I learned this from David, so I have to thank him for that. I learned a new thing. It will still show auto adjustment when they force the bank rec, even if they go in and change the account to office supplies or whatever, it will still show there. So you can see when they force that bank reconciliation. All right. So let me go ahead and I'm going to go into this reconciliation report, which you always have all the old ones out there. I'm going to go into a check and I'm going to change the amount. I'm going to show you how this works and how fixing it works and all that. So we got 6201. I'm just going to put an extra 0 in there, 620. Let's save and close that. So I'm changing reconciled transactions here. And let's go into this one and let's just click on more and delete. It says, are you sure? I'm going to say yes. I think I got deleted transactions. Oh no, look what I just did. I didn't scroll down far enough. I changed it on uncleared transactions. I am such a dork. I need to go to those cleared transactions. Why am I not seeing them? What am I doing wrong here? Usually it shows the cleared ones right there. Ah. Uncleared deposits, uncleared checks. Uncleared after that. It's not showing me them anymore. What the heck changed? All right, let me go into.
You don't have anything cleared.
I don't have. Yes, this is Craig's. Craig doesn't have any activity. That's why I'm not seeing it. Thank you, Dan. Oh, anyway, if I had done that correctly, I should have set it up better. I apologize. When you would go into reconcile, you would get that big warning here that things are off. Let me pop into Larry's landscaping real quick. Let's find one where we've actually got some reconciliations. And we don't have any out here because it's a sample account. Chase checking. None. I don't have any. Doggone it. Let's just reconcile. Your account's not ready to reconcile. Oh, good. This one's already off. So it's already off. I don't have to make the change. So this is where I was telling you, it's giving you that warning. And when you click on the we can help you fix it, this is what I was trying to show you. Good, we got several of them out here. All of these were reconciled in the register, except here's one that was deleted. So if they were reconciled in the register, or if the amount changed, if you simply click on that line, this is where I was showing you it's going to open up to where you can change this. So I can make it as a C, which is it's cleared but not reconciled, or reconciled, which we don't want, and or blank. So a C means it's tentatively cleared, it's been downloaded from the bank, but it hasn't been reconciled yet. So you can change that transaction right here just simply by clicking on it. All right, so whether it was an amount that changed or the status that changed. But then here's the one that was deleted. This is where we talked about you're going to click on view. You're going to come in here and you're going to look at the audit history for that transaction. So here's where it was deleted. So you're going to go to the next one, the one right previous to when it was deleted. You'll see here's the detail, and you'll see the amount and everything. You want to go in then and enter that transaction based on the same date, the same accounts, the same items if it was an invoice or a sales receipt, all that stuff. So you would re-enter that transactions, and that's where we talked about re-reconciling as of the same date and the same ending balance, and that resets that bank balance for you to fix your opening balance for the next month though. And then somebody says that story is LOL funny. David was sneaky. He was, and that's why he's a former client. He was not trainable. You know, I tried as much as I could, and he was not trainable. He insisted to keep doing it wrong. And I gave him plenty of warnings. And I mean, it was so bad. This was when my son was working with me. My son didn't even want to answer the phone or the messages when David would call. So yes, he is a former client, and hopefully he's doing well somewhere. But I did learn something from him. So I also learned firing clients can be a good thing sometimes. Okay, so Dan, is there a cool, they're saying cool on finding out if they changed the reconciliation. So somebody says if they change the reconciliation discrepancies. So Dan, in that situation where like David went through and he changed that to office supplies, it would still show up in the changed column on your reconciliation discrepancy report in desktop. Isn't that correct?
As far as changing the account, no, I don't think so. It has to be a status change, you know, as far as like a reconciliation status or amount. So any change doesn't make it, like if you change the account name, like David.
Oh, so that's going to be harder to find in desktop.
Yeah, but in desktop on the client data review, you do have, you know, if you do the client data review, any change to accounts, names, edits, modifications, adds to chart of accounts or customers or items, that kind of change is going to show up in the client data review. So another plug for the client data review, doing it that way.
Very good, very good. Okay, so here's where we've got those, the reconciliation summary. Hold on, I want to go into reconcile. I wanted to see history by account. Here we go. This is where when you're looking at the reconciliation history for a particular account, you will see that changes column. If they, like I was just talking to you about, where we showed you how it shows you what changed and how you can fix it and stuff. The auto adjustment column is where they forced it. So with David, with somebody like him, if they've been auto adjusting and they've been forcing the reconciliation for 3-6 months, you know, Dan mentioned sometimes you don't want to undo. Sometimes you do. In a David situation, I wanted to undo, you know, let's say 6 months and go back and re-reconcile because they never did it properly to begin with. But in Dan's point, if it's just one transaction, sometimes you don't have to undo, you know, 6 months worth. You can fix it by doing one re-reconciliation type of deal.
Yeah. Or in QuickBooks Online, it does let you reconcile into the register, so you can just do it that way. Just bear in mind that's going to show up in your changes column that reconciled and register, and it's legitimate.
Yes, yeah. And that's a good point. So what Dan was talking about was if I went into the register and let's say it was one of those deleted transactions. So they deleted a check that had been cleared. And let's say it was this one right here. And I re-entered that. Okay, so it was previously reconciled. They deleted it, said, oopsie, we've re-entered it. Now you can come back in here in the register and say, well, this really is cleared and reconciled. So you can change that status in this column in the register. And then that's where he's saying it is going to show up as a change in your reconciliation report. But in that example, it's okay because you are fixing it. Now to reset that beginning balance, the opening balance, you still have to go in and do that mini reconciliation, right, Dan?
No, not in QuickBooks Online because okay. That's the big difference between desktop and online is that it just adds up everything that has an R on it in the register, and that's the new opening balance when you go to reconcile. So especially if it's like 3 months ago and it's one transaction,
right?
That's a good case for doing that right in the register. You can't do that in desktop, so you have to have it go through the reconciliation module as reconcile now, and that's why you have to do those mini reconciliations, even if it's just one transaction.
Very good. Thank you for helping clarify the differences there. Okay, Dan, did we have any questions that we needed to talk about or answer out loud?
I was looking through them. I mean, there's a lot of good feedback.
George had a good comment.
Best practices in here.
Yeah.
I did want to kind of point out, you kind of touched on the difference between the different statuses about cleared versus reconciled. And a lot of times they're used interchangeably, but when it comes to QuickBooks, only the opening balance is going to be reflected based on what has been reconciled. Something that is cleared, where it's a C, or in desktop it's an asterisk, or lightning bolt icon. If it's cleared, it's been cleared with the bank, but it doesn't impact the opening balance at all.
Okay, and in Dan, in desktop, what does the star in the register mean?
The star is the cleared status. So rather than being consistent, having a C and an R, we have the star and the check mark in desktop.
Right, so it's tentatively cleared, but it's not reconciled yet.
Yeah, and then on a report, it's even more different than that.
Yeah, okay.
You have the lightning bolt or the star.
I'm going to go ahead and launch that final poll question. Did you learn something new today? And this was recorded, so a lot of people are saying great presentation, that is very helpful, and they hopefully did learn new things. So if you do re-reconcile without undoing the reconciliation, do you just reconcile for the one day for one transaction? Yes, Sherry, you can actually do the same date. Well, Dan, let me ask you, what would you recommend as a best practice? If the original reconciliation was the 31st of the month, do you reconcile, they go ahead and do a second one on the 31st?
Yeah, do the same ending date. You just bear in mind that when you look at when you see those previous reconciliation reports, you're going to see two of them. One's going to have the one transaction, and one's going to have all of the transactions that were done. And bear in mind that one transaction is going to be on both reconciliations, even though it was one transaction that was deleted. But then again, that's that moment in time that you're freezing when you do the reconciliation and record that report in the file.
Great. All right, so 82% of you did learn something new, and Gina says, I enjoyed it even though I didn't learn anything new. Well, I'm glad you enjoyed it, Gina.
Awesome.
And sometimes it's just nice to hear it again, because sometimes you might forget some things. A lot of times you may not have to undo reconciliations, very often, or you don't come across something very often. So if you're like me anyway, it's helpful to hear things again. I usually need to hear them very often to actually remember them. Let's see here. And somebody's saying, though, Evie says, though, in desktop, you don't see the two reconciliations. I thought I kind of remembered that. And that's why, though, some people they'll do one as the 31st, and then they have to do one as August 1st, because if they want to preserve the history of the reports, because I had thought that when you re-reconcile, Huh?
I'll have to double check that. I thought I had seen it where it was double, where it had 2 reports.
And I'm not up to date on desktop. So in the past, I thought though, if you did a second one the 31st, it would go over your previous report. It would only show the one report for the month. So I'm not sure now about that. You
now
might
we'll have to check our work.
Yes. Okay. Well, this is great, you guys. Yeah. And Karen says in desktop it replaces it, but Carrie says I believe you can still see both reports. So we have conflicting information.
Cage match.
So somebody can test it in desktop and see when you re-reconcile, do you in fact see 2 reports or not? And let us know in the Facebook group. And then somebody says, yeah, just do August 1st. So anyway, okay, as a reminder, join us for the next QB Power Hour. Dan and I are working on the schedule. We're working on getting all the videos uploaded and the website updated and a new website and everything for you. So remember, go to that qbtrainingevents.com. You can sign up for free webinars, free virtual conferences, as well as the road show. Please go check out the Grow Your Practice workshops and the master classes that are coming up this fall. People last year loved them, and they said that it was really very beneficial. But in addition to that, in various cities, we're doing the Intro to QuickBooks, we're doing regular course certification, and we're doing advanced certification. So please join us. We're coming to a city near you. If we're not near you, fly on down and come and meet us. I think I'm doing Miami in December or something like that. So come down where it's warm and join us. We'd love to have you there. And then again, don't forget QuickBooks Connect. All right. Dan, any other final comments here?
No, just keep matching.
Just keep matching. Yeah, keep using those bank feeds and matching those transactions. So, okay, well, we can keep the discussion going in the Facebook group because I know there were several questions here that we were not able to answer for you all. But go in that Facebook group and you can help one another, and Dan and I and Hector can help you as well. And we will see you in a couple of weeks. So bye, everybody. Thanks for joining us.
Bye-bye. Have a great day.
Thank you, Dan.